Good morning and how do you do, ladies and gentlemen? Excuse me, I'm your host, Seth Julian, welcoming you to today's morning coffee briefing. We're looking at a chart of the dollar yen, and as you can see, we have not reached this level, 129.12, since 2002. Now, keep in mind that when the dollar is on the left, and the other currency of the dollar is called the base currency, the unit on the left is always the base, and the unit on the right is the one that moves along the vertical y-axis. When the dollar yen goes up, it means it takes more yen to buy the singular dollar. The coefficient of the left-hand element is always 1. Like in gold, like in oil, it's 1 troy ounce of gold, 1 barrel of gold, 1 US dollar per Japanese yen. And so that right-hand element moves on the vertical axis, and that's what we see printed here. So when dollar yen goes up, it means the yen is weak and the dollar is strong. Now, there are several reasons for this, mostly because the Bank of Japan is one of the lamest, most backward central banks in the world. If you want to find out what not to do in central banking, look to the Bank of Japan. I want to show you these statistics. These printed out early this morning in Tokyo. This is the GDP, private consumption, and early this morning, capacity utilization, industrial production. They're all negative. Don't be misled by the green imprint. That just means they're less negative than was expected. They're negative. The Japanese economy is shrinking. This index here, called the Tankan Index, now it's called the Reuters Tankan Index because they bought the company that makes it, is a very simple indicator. It simply subtracts the number of people who think the Japanese economy is better than it was in the previous month from those who think the opposite, and you get this output. And you can see, not looking so good. This is the decline in Q1 of 2020 when the plague strikes. It recovers, but it's not doing so well over here on the right-hand side of the margin. I'll magnify that. Here you see, as of August of 2021, it's in decline. So all of this points to this reality. A weak yen, a continuing weak yen. And by the way, I do point out one last thing, and that is that the Bank of Japan, unlike all of the central banks, at least in the developed world, is not raising interest rates. They're keeping interest rates low. They think it's in their interest, and it is, from a certain economic perspective, particularly that of exports, to keep the exchange rate low. Regardless, we as traders see this as an opportunity to buy dollar yen, because it's way above the 20, way above the 50, and miles away from the 200-day moving average. Volume is increasing. The force index is well into positive territory. And all this spells the likelihood of a continued upward movement in dollar yen. So, ladies and gentlemen, that's going to conclude our session for today. I'm your host, Seth Julian, wishing you all, ladies and gentlemen, the ability to trade with confidence. Bye-bye for now.